Welcome to Money Minds. Could Nvidia stock really hit $10,000 by 2025? It's a fascinating question. This isn't just about a company performing well on the stock market. This is about a tech giant, Nvidia, that has been consistently defying expectations, fueled by the rise of transformative artificial intelligence technologies. But reaching that $10,000 mark, that's a whole different ballgame. To answer this, we need to delve into the factors contributing to Nvidia's growth. In the heart of Nvidia's growth lies a powerful force: artificial intelligence. A titan in the tech world, Nvidia's meteoric rise is largely fueled by its advancements in AI. This isn't just any run-of-the-mill technology, but a transformative one that's reshaping industries and how we interact with the world. Imagine having a conversation with a computer that responds just like a human. That's what Nvidia's AI technology, ChatGPT, does. It's a chatbot, but with a twist. Instead of offering pre-programmed responses, it generates replies in real time. It's like talking to a human, but it's a machine. And it's not just about conversation. This technology can be used in a myriad of ways, from customer service to content generation, and even in education. But Nvidia's AI prowess goes beyond ChatGPT. Their AI technologies are finding applications in a range of sectors. In the medical field, for instance, they're being used to analyze complex medical images, potentially revolutionizing diagnostics. In the automotive industry, Nvidia's AI is powering self-driving cars, making them safer and more efficient. Nvidia has also made strides in the realm of machine learning, a subset of AI. Their technology is being used to train algorithms, enabling them to learn from data and make predictions or decisions without being explicitly programmed to do so. This has enormous potential in fields like finance, where machine learning can be used to predict market trends, or in weather forecasting, where it can help predict natural disasters. This is the power of AI. It's not just about making machines smarter, it's about harnessing that intelligence to solve real-world problems, to create value where there was none before. And Nvidia is at the forefront of this revolution, pushing the boundaries of what's possible with AI. But here's the million-dollar question, or should we say the $10,000 question. Nvidia's AI prowess is undeniable, but how does this translate into stock value? To understand Nvidia's stock potential, we need to examine its current valuation metrics. A key aspect of this evaluation is the price-to-earnings ratio, or PE ratio. This is a popular tool used by investors to determine the relative value of a company's shares. When we look at Nvidia, we notice that its PE ratio is relatively high, which typically indicates that investors expect high earnings growth in the future. Another metric to consider is the price-earnings-to-growth ratio, or PEG ratio. This valuation metric is considered more nuanced, as it incorporates the projected earnings growth rate into the calculation, providing a more balanced perspective. It's often used to determine a stock's value while also taking the company's earnings growth into account. A lower PEG ratio can indicate that a stock is undervalued. Interestingly, Nvidia's PEG ratio suggests potential undervaluation, which points to a promising future for the company's stock. But what do these metrics mean in plain English? Well, the high PE ratio suggests that investors are willing to pay a higher price for Nvidia's stock because they believe the company will continue to deliver impressive earnings growth. And the low PEG ratio implies that despite its high PE ratio, when we take into account Nvidia's earnings growth, the stock might still be undervalued. This could mean that Nvidia's stock is a good buy. However, it's crucial to remember that these metrics are just tools. They provide a snapshot of Nvidia's financial health and market expectations, but they don't predict the future. They can't account for sudden changes in the market or unforeseen challenges the company might face. These metrics paint a promising picture, but achieving $10,000 by 2025 requires something more. As we continue to explore Nvidia's potential, we'll delve deeper into what that something more might be. One key to unlocking Nvidia's stock potential is the PEG ratio. Let's pause for a moment and dive into this financial metric. The price-earnings-to-growth ratio, or PEG, is a valuation metric that enhances the traditional price-to-earnings ratio by factoring in the expected growth rate of a company. In essence, it provides a more comprehensive picture of a company's value by balancing its earnings against its growth potential. Now let's apply this to Nvidia. A substantial expansion in the PEG ratio could be a significant catalyst in propelling Nvidia towards the ambitious $10,000 target. But how exactly? Let's break it down. A high PEG ratio could indicate that a stock is overvalued, or that the company's earnings growth, is expected to be robust. On the other hand, a low PEG ratio might suggest that a stock is undervalued, or that the company's earnings growth is expected to be sluggish. In Nvidia's case, its current PEG ratio, coupled with its significant growth potential, particularly in the realm of artificial intelligence, paints a picture of potential undervaluation. This undervaluation, if it indeed exists, could be a sign of a golden opportunity for investors. If Nvidia continues to innovate and drive growth in its AI technologies, the company's earnings could skyrocket, thereby pushing up its PEG ratio and consequently its stock price. But here's the important part. The PEG ratio is not a crystal ball. It won't tell us with certainty whether Nvidia's stock will reach $10,000. It's a tool, a piece of the puzzle, that can help investors make more informed decisions. It's crucial to remember that while the PEG ratio can provide valuable insights, it's not infallible, and it certainly doesn't operate in a vacuum. While the PEG ratio is crucial, it's not the only factor at play. As with any stock prediction, uncertainties remain regarding Nvidia's future. The road to a potential five-figure stock price is fraught with variables and unknowns. It's important to remember that while Nvidia is a shining star in the tech sector, it's not immune to the challenges that can impact any company's stock price. For starters, there's the ever-present risk of market volatility. Economic downturns, geopolitical tensions, and unexpected events can send shockwaves through the stock market, causing even the most robust stocks to tumble. The stock market is a complex ecosystem, and Nvidia is just one fish in this vast ocean. Then there's the future of artificial intelligence itself. Nvidia's potential for growth is largely tied to the advancement and adoption of AI technologies. But what happens if the pace of AI innovation slows down? Or if new technological breakthroughs render current AI technologies obsolete? These are questions that investors need to consider. Additionally, the impact of AI advancements on various sectors remains uncertain. While AI has the potential to revolutionize everything from healthcare to entertainment, the adoption of these technologies isn't guaranteed. Regulatory hurdles, ethical concerns, and practical challenges could all slow down the integration of AI into different sectors. There's also the competitive landscape to consider. Nvidia is a leader in the AI field, but it's not the only player. Other tech giants are also investing heavily in AI, and new startups are emerging all the time. If one of these competitors manages to out-innovate or outperform Nvidia, it could put a dent in Nvidia's growth trajectory. Finally, there's the question of valuation. While Nvidia's current valuation metrics suggest potential undervaluation, these metrics could change in the future. If the market starts to view Nvidia as overvalued, it could put downward pressure on the stock price. These uncertainties make the $10,000 target a bold prediction, but with Nvidia, anything seems possible. The road ahead may be filled with uncertainties, but as we've seen time and time again, Nvidia has a knack for defying expectations. So, could Nvidia really hit $10,000 by 2025? As we wrap up our discussion, let's take a moment to reflect on the key points we've covered. We've delved into the heart of Nvidia's potential, driven by the transformative force of artificial intelligence. AI isn't just a buzzword for Nvidia, it's the fuel propelling their growth trajectory, solidifying their standing in the tech industry. Technologies like ChatGPT are testaments to this, revolutionizing not just tech but various sectors including academia. We've also explored the importance of valuation metrics in understanding Nvidia's current position and future prospects. Metrics such as the price-to-earnings ratio and the price-earnings-to-growth ratio are more than just numbers. They provide a window into Nvidia's potential undervaluation and the substantial expansion required in the PEG ratio to reach the $10,000 mark. But let's not forget the role of uncertainties. The future is inherently unpredictable, and the impact of AI advancements on various sectors remains a question mark. While these uncertainties might seem daunting, they also hold the potential for unprecedented growth and innovation. In essence, Nvidia's journey to $10,000 is a complex tapestry woven with AI potential, valuation metrics, and the unknown. It's a narrative of defying expectations and pushing the boundaries of what's possible. Only time will tell if Nvidia can defy expectations once again and hit that $10,000 mark. Stay tuned to this channel for more updates on this fascinating journey. That's all for today's analysis on Nvidia's stock potential. We appreciate your time and interest in this topic. It's your curiosity and passion for understanding the intricacies of the tech industry that keep us motivated. We encourage you to subscribe to our channel for more updates on Nvidia's journey and analyses of other tech stocks. If you found this video informative and insightful, don't hesitate to hit that like button and share it with others who might find it interesting. We're all about spreading knowledge and sparking meaningful conversations, and your support makes a huge difference. Once again, thank you for watching, and don't forget to hit that subscribe button. We're looking forward to seeing you in our next video.